All right, all right. All right. Here we go. I'm getting a warning on the screen. Let's take a look at this. Look at the market today. This is the NASDAQ. This is the one we like to trade. It's kind of one of our favorite markets. Doesn't mean we can't trade the others. We have 4 other markets that we can trade to, and they're all shooting around. And on the little marquee this morning, I said that we were going to be looking at some wild stocks that run pretty hard. Well, actually, stock indexes. All right. So we're going to be looking at some stock indexes that run pretty hard. And right now we're looking at the NASDAQ. Now, this is the NASDAQ over in the futures market. It's not out of the stock market. And last Wednesday, when we were trading the futures market, okay, you have to have a different piece of software so that you can connect to the futures market and trade like this. You can't just use your stock software. Now, some companies let you use their stock software to trade futures, but don't do that. That's a bad idea, in my opinion. I mean, you're not going to be day trading on a stock platform to the futures market. It just doesn't make sense. There's enough differences, all right, that you need to really have a platform that's designed for that. And of course, just real quick, here's the software I'm using.
Okay, this is the software I use. It's called Track and Trade. They've got two versions, one for stocks, one for futures. This is the website. Track, the letter N, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, I'll show you all my settings. Now, the thing that I want to do this time, all right, last Wednesday we traded the ATR and we traded the NASDAQ. We traded this market right here. And we also used the Fibonacci bars. And that's why the bars kind of look funny, all right? You're looking at them, you're like, I don't know, how does he get that? That looks like cheat codes. They are cheat codes. Turn them off. They look like that. Now, we're also looking, this is a range bar 6 chart, okay? So it's a little bit small. It's going a little bit fast, and that's why we talk about fast markets. So if the market's really buzzing, you can't really trade this. Like first thing in the morning, right out of the gate in the NASDAQ, you really don't want to be trading the range bar 6 bar. So what is a range bar 6 chart? Range bar 6 chart is a chart that doesn't have time involved. So each price bar is just trend movement only. It's how far has the market moved. It has to move 6 minimum moves before it'll give you a new bar. As soon as it moves 6 minimum moves, it'll give you a new bar. And so that's what a range bar is. Now we take range bars and we turn on the cheat codes. So we make them Fibonacci bars. Now watch this, boom, just like that. And it's like magic. Suddenly you're like, even I could trade that and make money, maybe. All right, so this is the strategy that I want to play with today. And I want to look at this. Now, we don't necessarily want to be doing it on a range bar 6. It just happens to be the one that I have turned on. We can go to range bar 25, which extends that out a little bit, gives it a little bit smoother trend, but of course, takes longer for it to happen, right? Market would have to move 25 minimum moves before it makes a new price bar. So we could actually come in here and we could change this altogether. We could come in and you notice down here, I also have range bar 50s. So we go all the way out to a range bar 50 and you're going to see what it looks like. Let's bring that data in. Hold on. Come on, internet. Come on, little internet. Go faster. It's downloading the data for the range bar 50s. So it's going to take a second here. While it's doing that, let's come over here. What have you guys been doing? Let's go say hi to a few people. John Gaisley, nice to see you. There's a lot more people watching than who's saying hi. If you guys want to say hello, I'll make you famous. There's John, and we got Albert, both in here saying hello today. So go ahead and put your little marquee up there, say hello, and I'll make you famous. Oh, okay. We just popped in with the range bar 50. So this is what the range bar 50 chart looks like. All right. Now, if you look back, that's as of yesterday. That started yesterday. And it's coming in. This is 9 o'clock this morning right here. And then this is just what the market's done all day today. Look at that nice little 3-drive pattern right out of the gate. 1, 2, kind of a little bobble there. 3 drives right up in there. So kind of almost a little 4-drive pattern in there, isn't it? With that little tiny one right there. But there you go. That's what the market's been doing. It's just going straight up. And everybody's looking at this thing going, what in the heck has happened to the stock market? We haven't had a single pullback to give us any re-entry points on this thing at all. And I've been following the large speculators. And the ones that are, they're the ones that kind of drive through what we call the Wyckoff strategy, right, which is the Wyckoff pattern. And this is what we generally look for. We generally kind of look for a market that rallies up and then turns and comes back down a little bit. And that one's not the one I wanted. This is the one I really want right here. See, this one has a little tendency to rise up, goes through these Elliott Wave patterns up to the top, then turns around and comes back down halfway or 50% of the last major move. And then it kind of settles in, and then it turns and starts to go back up again. This is what we generally see in the markets. We can go back and find that recurring price pattern a million times. And so this is driven by large speculators. Okay, and that's what they are, large hedge funds, large speculators. They're the ones who do this in an effort to accumulate, make money, and then distribute. And then they take their money off, and then they do it again. So this is the process, and they generally don't do it. Of course, they're not some guy sitting on Wall Street in a big high-rise building banging on his little mouse. They do it with quant systems, all right, computerized trading systems. And so that's why it's so consistent, and that we can so easily and often find this pattern. But again, it's done by the big speculators and the big hedge funds. And if they're not running this strategy, well, the market's not going to do that, of course. So, and they haven't been doing it. I mean, it started off like they were going to do it, drive one. We got a nice this little bugger in here, which kind of threw us off a little bit, but I think that's all one drive one. So you got the blue light that's kind of telling us, right? So we got drive one in there, and then we got drive two, and then it kind of went sideways and did this little sideways thing in here. And so this is kind of like we're into drive three up in here. I thought we got up into drive three right up in here. I thought this is where we were going to get the little pullback back down into the Fibonacci sweet spot. The market goes sideways a little bit. This gives us the opportunity to get back in, join the next rally, and it never did go. Now, does it mean it's not going to still have a pullback? I don't know. These guys generally like to sell out, take their profits, and once they've sold out, they like to let the market flush so they can get back in, do another accumulation stage, and go back up again. But I've been watching the large speculators, and the large firms haven't been selling out. They haven't sold anything. They're still buying. They bought a whole bunch of Amazon just the other day. Let's go look at it. Okay, Amazon's over in the stock market, and we're looking in the futures market. But I was going to go look at Amazon. We could pull it up and look at it. But nonetheless, maybe you can go look at it. I don't know. We can still go look at it. I got a notice just the other day that they were AMZN. Just look at it on a web program, little web program. Well, right there, they are doing all their buying. Now we get a little bit of a delay. So Amazon's starting to flush. Now look at that. We're getting a little double top, and we're pulling back now. So there's your nice big drive one, drive two, drive three. That's the ABC. So Amazon's following that pattern perfectly. And so that is a real key to what we might be seeing over here in some of these markets. We may be, the thing is just still going like a rocket ship. Who can predict this market? I don't know. I think the one thing that we're all worried about this thing flushing like a toilet is when the Supreme Court decides whether they're going to let Trump continue doing his tariffs. If they take that away from him, this market's going to fall, and it's not going to ever stop. It's going to go it's just going to go straight down forever. If they come back and they say, I'm sorry, Trump, you can't do your tariffs, and you have to pay everybody back all the money you've taken in tariffs since you began, this market is just going to go straight down just as fast. It's just going to go wham. And Amy Coney Barrett is the one it's all on her shoulders. She's the one that's going to be the deciding vote. Amy Coney Barrett she's got the whole world in her little fingerprints right now. And she's been saying she's not going to let Trump have his tariffs. Scary, scary stuff. All right, let's come back in here and see if we can. Let's come in, and I'll show you how we can set this up. We can go to a 25. This is our range bar 25. We can come in here. We got range bar 6. We could come in here and open up a range bar 6 right here, and we can turn that on. But we're going to go into maybe this. See how it's a little choppy. It's a little choppy, that range bar 6. Range bar 25 doesn't look too bad, but it's a little slow, and we want to do a little faster. Let's come in here, and we're going to change our range bar 6, and I just right click on that tab. I'm going to change it to a range bar 12, turn that tab into a range bar 12. Come on, range bar 12. All right, so we're going to make that a range bar 12 instead of a range bar 6. And we're going to see how that looks. Still a little bit choppy. That market's just being a little choppy. That's all there is to it. Now, I wanted to change up our strategy a little bit. Look at this. Little tiny drives before we get the pullback. Little tiny drives, pullback, little tiny drives. So we got a 3-drive pattern going up there. And now we're coming down with a little ABC pattern. But it's all so small that it's hard to make any money on that. We need a little bit bigger runs, and it needs to be a little smoother. We got lots of topping tails and bottoming tails on this range bar 12. I don't know if I want to try and trade that one. We can try. How much money is it making between an entry and an exit? That's 60, 80 bucks. It's going about 4 bars. Entry to exit. It's about all we're making in this thing. 50 bucks each time. Now I wanted to change up the strategy because if you remember last time we used the ATR. I'm going to use the 12 range bar 12. I don't know. We can try it. We can adjust it and go to 25 if we want to slow it down. I want to be a little bit faster because we only have 45 minutes till market closes. So I want to move a little bit. I want to, I don't want to sit there for 20 minutes waiting for one new bar. So we're going to come in here and I'm going to show you. I'm going to remove the ATR. Now, last week we used the ATR for entry and exit, right? Remember that? And we trade the entry, and of course we do day trading once a week. Every Wednesday at 1 o'clock in the afternoon, we do day trading. Then Tuesdays and Thursdays, we trade stocks. And that's because we're on the summer schedule because this is our university lab. And the university, our classes are going to start up again here in mid-October. So we'll go to a more aggressive time frame. We may start doing Mondays and Fridays as well. So Monday, Tuesday, Wednesday, Thursday, and Friday. We'll trade all 5 days of the week during class. All right. And then we'll probably back off because we take some breaks. So we'll back off and maybe just do Tuesday, Wednesday, Thursday, or Monday, Tuesday, Wednesday, Thursday, not on Friday. We'll take Friday off. I don't know. We'll see. We'll see how class is going. But right now, we just do once a week. And so it was last Wednesday that we did the ATR. And if you didn't see that lesson and you would like to learn how we did that, go back and watch the last Wednesday class, then come back and watch this one because we're going to modify the strategy. All right. So we're going to come over here to the trading tab in Track and Trade and see these little buttons right here. They are programmable. So we're going to come in, and the way we were doing this is we were doing an intercept on the ATR. And this is the settings that we were using last week. Let me show them up. It's number 7. So this was the one we were doing. Intercept, ATR, stop 25, ATR, limit 50. And that's what we did. Now, if you want to, take your little phone, come in here, and we're going to take our little phone. We're going to take the little cell phone. You guys all have one of these, and take that picture. And you can go in there, and you can make that strategy. Now, what we're going to do is we're going to modify that strategy. So we're going to come in, and instead of, and so we're going to hit cancel. We're not going to use that one. We're going to do a different one. So I might already have it in here, right there. I think that's the one. Actually, I'm going to create a new one just so you guys can watch, see how I do it. All right, so we're going to come in and we're going to add a box. Add one. And we're going to come in here and we're going to right click. We're going to say add new QCO. And we're going to come in here and we're going to give it a name. The last one was number 7. So this one will give a number 8. All right. Do we have a number 8 already? Let's go see. I don't want to do an 8 if we already have an 8. Nope, we don't. We have a 7. We have a 1, a 2, and a 7. We could make this another 7 so that the 2 7s are the same strategy, just with a little bit different twist. Or we could say, no, we're going to go ahead and make it a new one. So we'll go in here and we'll go add new QOCO. And we're going to go number 8. Number pound 8. Hashtag 8, as the kids call it nowadays. All right. Number 8, and we're going to call it this is going to still be an intercept order. Intercept, instead of intercepting the ATR, we're going to intercept price bars back. PBB, price bars back. Bars back. All right. And so it's going to be the exact same strategy as before, but we're going to do price bars back. So now we go dash, and we're going to do it with a stop order. We'll just do same thing we did last time. Price bars back, dash STOP. Now this is just the name. All right, this doesn't really do anything other than just remind you of what it's doing. STP, so we're going to have a stop at, and we're going to stop trail. Well, we could use the ATR, but we're going to do price bars back. Price bars back, and we're going to do one. We'll just do one price bar back. So let's put that in there. One price bar back, and then we're going to have a limit order at LMT. And last time we had 50, so let's just do 50 again, like that. All right. Now what we need to do is come down and create the boxes that make that happen. So we're going to come in here and we're going to use a stop order. So the order type, we said right here, we're going to do a stop order. And we said we're going to put a stop at 25. So let's make that 25. And we said we're going to put a limit at 50. So let's make that 50. And then we said that we were going to trail price bars back. So for entry, we're going to trail price bars back right here, price bars back. And how many price bars back are we going to trail? We're going to just trail one, and I'm going to do 1.1. The reason I do 1.1 is because there's a spread in there, and you can see right up here, the spread is between 1 and 2. So we're just going to give it that one price bar and 0.1 spread. All right. And then what did we say after that? We're going to just trail. Is our stop going to trail? Yeah, our stop is going to trail. We're going to trail it price bars back. And we'll do the same thing. We'll do 1.1. All right, so we're going to trail for entry. We're going to trail for exit. And we're going to trail until break even. Nope, we're going to make this a day. Filter higher or lower. Nope, we're just going to keep it just like that. Okay, let's go give it a shot and see how it works. All right, so we're going to go in. You got that? Take your camera, take a little picture of it. Give you a second to take a photograph. All right, so let's go ahead and hit OK. Now we're going to come in here, and now since we're going price bars back, now you have to remember we need a market that's making good flat bottom top or flat bottoms or flat tops. Okay, we can't have a market that's making a whole bunch of hairy tops and hairy bottoms. All right, like this, no whiskers, as Claire would say. She says lots of whiskers. So see how this got lots of whiskers through here? High tops are hairy, and there's only making one or two flats. And so it's got lots of hairy tops and bottoms. You can't trade through there because that makes it really hard. Of course, you don't know when it's going to stop doing that and start trending like this. So you have to kind of wait for the market to start trending like this, and then you're going to continue or anticipate that it's going to continue trending like this. It doesn't always happen, so you have to be very cautious and careful. But sometimes when a market starts to trend, it starts to now we've got lots of hairy tops and hairy bottoms again. So we have to kind of sit here and wait. I'm not sure I like this chart. This range bar 12 might not be our best bet. We'll go to range bar 25. We're not getting anything better though over here either. Well, a little bit better. It's just going to take forever for us to trade it. You might, when you're doing your own real money, do something that takes a little longer. The reason I'm coming down to these really short-term time frames is because we're limited on time. All right. So I want to make sure we get some trades in. If we sit over here on these long time frames out, it might take us an entire hour to get one price bar, and that's no fun. So you got to realize we're learning. All right. This is a educational class. It's a lab where we're learning, we're practicing. This is a demo account. So we're learning how to set up the software. We're learning how to execute the trades, and we're going to do them on a little bit faster market than what you might do in the real life trading, just so that we can practice a little bit. Doesn't mean you can't make money here. It's just a little bit more difficult because the market's, it's just the market gets a little hairy sometimes when it's not trading. If we go back in time, even on this market, we had some good runs. See this? It just depends on the time of day of when you're trading. And usually I like this, power hour. We usually get some good trends. So I kind of want to trade back here. Now I turned off the ATR. Because we're not using it with this strategy. We're just using the color coding, red to green, and then we're waiting for an opportunity for the market. Now, this is an ABC pattern right here, A, B, C, and usually we'll come down, and then sometimes we'll get a little retracement down in here. We'll get a little A, B, C back up like that. So let's anticipate that. Doesn't mean it can't give you just another little couple of green bars and give you another little ABC down. It certainly can. So we want to be careful just in case it does one of these things, right? So what we're going to do is we're going to come in here, we're going to place our order, come over to trade. We're going to grab that QCO4 that we just created. We're going to drop it above the market, way up here. It doesn't matter anywhere. Computer's going to take it anyway. And we're going to drop it, and it's going to come down. It's going to start trailing down one price bar back on those bars And then when we get the reversal, the first candle to break a new high, it's going to go back up and start to go back up. We hope. Now, the problem is if you get these little spiky dikey doos in here, you're going to get entered, and then that's not good. That's where you could lose money. All right. So we hate these little spiky dikey doos like this. We want the market, if it breaks the previous high, if it breaks the trend, we want it to turn around and actually go. So you kind of usually want to time your entries and have it start following about the time you figure you're at the bottom of the ABC pattern. So we're only at 61.8 right now. Usually we consider the bottom to be 90, 100. So you don't want to sit here and wait for it to get down into the 90, 100% level before you start looking for a reversal. Now, okay, it's reversing early right here, or at least it might just be a spiky dikey do. And if it does, it'll come back down and stop us out. That's going to come down and stop us out. That's going to be a spiky dikey do right there. Doggone it. So there's another little spiky dikey do. Let's hope it turns and keeps going back up. Come on, buddy. Didn't stop us out. We're still down here. We're one price bar back. Oh, it stopped us out. So we're going to have to put it back in there one more time. This time we're going with 2, and then we're going to drop it in here. And we're waiting for it to come. And usually you kind of want to wait for it to get down into that 90, 100% level before you place your order in there and start trailing, because you want it to get down to what we consider to be the bottom of the ABC pattern before it turns around and maybe starts going back up. All right. If you're trying to catch a reversal, usually it's easier to catch the trend than it is the reversal. So the trend would be that you see the big long red, and then what we do is when it starts getting green and you get 2 or 3 bars of green, then we put the order in there looking for the reversal coming this way. All right. Or the reversal, which would be the continuation of the ABC pattern. Does that make sense? Hopefully that makes sense. All right, let's see if this is any better than the ATR. We had good luck with the ATR. We had a nice run. We're going to put this in here one more time right here. We're going to see it came down and almost touched that 90% level. We're anticipating a reversal. Market turn around and go back up. All right, so it's going to trail. Every time it gets a new price bar, it's going to just trail to the previous price bar's high. So if it does go up, it would be the first green candle to break a new high. Now you can wait and just use the market orders, but this is using that stop trailing order where it just automatically does it for you. You don't have to wait for it to go and give you a green bar and then hit the buy button and have all the orders set in automatically. We can do that too, but this is see how it automatically comes in. Now it came down, touched that 100% level. Now we're going to anticipate, see how it came down right here, touched 100%. Now we're going to anticipate the rally. The problem is we're down $80 already, so that sucks. This is going to give us 500 right here if it comes all the way back up here. Now, sometimes what I like to do when I get down, if I feel like it's a lot, which $80 isn't a lot in this market, we could come down, we could bring this down, and we could put it at $80 and get our $80 back, and then we got stopped out again. So is it going to go down further? We got 130.9 down here, which is actually the golden ratio. Kind of like to the extension side, 61.8. If we get a new high, I have to drop it in there again. You dirty little dog. Now we've down $170. We've had 2 losers already. Okay. We're going to try one more time. We're going to go exit. I'm going to ratchet it up. Now we're looking for the reversal with 3 contracts, because the first one we did 1, we got stopped out. The second one we did 2, we got stopped out. The third one we're doing with 3. Now we got 3 contracts, so we should make up the money that we lost a lot faster because we got 3 contracts. So we've had 2 losers in a row. Now we're looking for a winner. Okay, so we ratcheted it up. It's a little dangerous doing that. It's called martingale. Okay, so we're going to come in here and we're going to say 170 is all we need to break even. Oh, it stopped us out again with 3. So we're going to go to, are we going to go 3? We'll go to 4. Boy, look, this is ugly. Let's wait and see what the pattern looks like. We want to turn around and go back up. Doesn't mean it's going to. It could just keep going down. You can say, Lan, why don't you keep going to take short positions instead? Well, because we're looking for a reversal. Let's see what these bars look like. to drop it in there and see what happens. Okay, we're long again, this time with 4 contracts. Now, how far does it go to get our money back? 390. We could bring this down to 390. Oh, they're all 3 separate. Oh, I hate it when it does that. I don't want 3 contracts up there. I want them all to come out at once. They filled our order separately. We'll do that. Do something like that. Come on, buddy. Let's rock and roll. Let's get a big, nice, long rally here. No, you're not going to do it again. Oh my heck. Oh my heck. Should we go to 5? Might as well. Uh-oh. Don't go back up right now. You just came down and stopped us out. You're going to go green again? You dirty, rotten bugger. Look at it just go sideways. Nobody wants to trade today? Come on, it's a nice Wednesday afternoon. Everybody should be sitting in front of their computers. Nobody should be out having a barbecue right now. Everybody's here, wants to make money. Come on, come on. It's power hour. See if it gives us another bar. One more down bar. Come on. One more down bar. Another red. Give us one more red. Don't you go flopping back again. Look at this ugly thing. We can't trade this. We should just be going downstairs and cooking some hamburgers. Everybody else who obviously is outside cooking hamburgers. First green candle will make a new high. It's coming into a little pennant formation right here. So we got this little pennant thing happening. Come on, we want to go long. Are you gonna take off right now? Doesn't want me to do it that way. Okay. We're going to just put our stop right here in case it breaks out. Come on. Give it to us. Give it to us. There, we're going to have to get out. We're going to have to get out our voodoo science. Okay, here we go. This is the science that gets us some. Come on, voodoo science. Make that baby rise, rise, rise. Shake, 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 shake. Rise, rise, rise. We need to put in, let's get rid of this one. We're going to right click on that order, add OCO, and we got 5 of them in there. And we're going to come in here and we're down 4. We're going to just take it off right there. Now we're up $175. All right, so now we can go back to 1 and we can start over again. Nice job, buddy. Oh, I'll take that out of your neck. Nice job. Thank you very much. Okay. Here, we'll put it in your right hand. That means money. All right. So we made money with our little voodoo science. He got us a trend. So if you don't have one of those, you got to get one. Otherwise, you'll never be able to win at trading. Okay, so we got our 650 back and plus 175. So we got no positions open, closed positions. Here we go. All right, let's see where we're at now. Now we're going to are we going to look for a reversal or a continuation of the uptrend? I don't know. Right now, still we got to get higher highs and higher lows, lower highs and lower lows. So we're going to still take another short position just with a single. All right, we're going to see if it's not going to fall again. Now we're just doing price bars back. We're not doing the ATR. We don't have the ATR turned on. So the trailing stop is one price bar back, and the order itself is trailing one price bar back. Uh-oh. Don't spiky dikey do us again. Now we need it to flush. Flush like a toilet. Come on, we got money now. We got money. We feeling good about ourselves. Let's make some money. How much do we need? We need another to make 500 bucks. That's our goal. Now we only have a single, so we could come in here and, oh, it's going back up. Don't stop us out. You rotten little mistake. Dude, I'm done with going up. We can go down now. We can go down now. We'll talk to this one. This is the red guy. He'd make the market go down. Got to have one of each. Okay. See what's going to happen here. One, two. Are we ready to drop another one in here with 2 contracts to the short side? I don't know. We're getting a little top for it. We're meeting our little ABC right here, right now. Right here. Right there. We just touched it. All right. You could put a short position right there, but that'd be catching a falling knife to the rising side. Catching a falling knife on the way up. A lot of guys will put an order right there and take a short position right there, but we're not going to do that. We're going to wait and see what happens here. We're going to get our order ready because we're going to drop it in here. Yeah, I think we better put it in there. 1 price bar back, 1.1 price bar back. Now we want it to turn and flush. Down she goes. Nope. Now it's going to go up and stop everybody out. Just like a train on rails. Just like you read it out of the manual. Why'd you do that? Because that's what I do best. I go stop everybody out. Okay, we'll try it again. Just wait for it to reverse. Lan, just capture the trend. It's better to try and go up in a green bar market than down in a red market. I know. See those little pennants in there? These are also opportunities if you wanted to. 1 price bar back to the long side. 1 price bar back to the long side. See, we could be long right here off of this one if we wanted. But I'm trying to take the reversal. Probably, are we going to go up and test this high up here? If it does, I hope it goes straight up so we don't get spiky dikey dude out all the way up. That'd be nasty. Just go straight up there if you're going to go up there. Lots of flat bottoms. Just trying to break through that high again one more time. It's like, can we do it? Can we do it? Are we going to make it up there? Let's see if we can close a bar above it. If you can close above it. Oh, it closed above it. Now we can go to the next one. We're just looking for the reversal. So we're just trailing up 1 price bar back. Now the bar that's on, the action bar is the one right here. This is the action bar. Okay. This is the action bar. So the 1 price bar back doesn't count the action bar. It's 1 back from the action bar. So this is the 1 price bar back. And we're just trailing 1 price bar back with a limit or a stop order for entry to the short side. And then these 2 are sleepers. All right. This order right here that's sitting right where the market's trading, that's a sleeper. That one doesn't become active until this one becomes active. So that's our stop, our trailing stop, when this order becomes active, when our trigger order becomes active. So this is called 1 triggers other. So this order, when the market fills it, it'll trigger that one to become active, and then it trails 1 price bar back, right? And then this becomes active, so it triggers that one to become active. So now, if the market comes down, if it hits this one, it will cancel that one. That's called one cancels other. So this was a one triggers other with a one cancels other. Now that's trailing one price bar back, and it'll trail down. Now we can stop it if we want to. We come in here and say trail till break even. I'm not sure if it'll do it right now since I already told it to do it. So it'll trail down to break even and then stop trailing and it won't continue to trail. That way, if it does come back and give you a little spiky dikey do, you're less likely to make money or lose money. Okay, so we're up to, we're down $50 because we lost a couple of times. So we lost our $175 buffer. Ooh. Keep falling, buddy. Keep her up or keep her down. Come on. Oh, we got an opportunity. Oh, there we go. Let's tell our little guy to go. You like this little guy? Look at that. Oh, he's scary. Come on. Okay, keep going. Down, down, down. I'm going to turn that. Uh-oh. Tail to break even. Trail. Price bars back. Just in case it turns around. That kept us from spiky dikey doing out, but I'm getting a little nervous here that it's not falling. So it might turn around and go back up. We'll take our profits off if it does. All right, come on, buddy. Come on, buddy. Oh. Don't stop us out. Keep her going down. If you get stopped out, you're getting this in the neck. In the neck. It's coming in the neck. Ah! You didn't do a good job for us this time. Now we've got our money back and we're up $85. Let's come back to 1 again. Start over. All right. Are we going to try and take the trend or are we going to try and take the counter trend? Do we think the market's going to go up like this? Whether this is just a counter trend down, it's going to bottom out. Oh, look, just as we get out, stopped out right here with little spiky dikey doos, it drops like a rock. We should have left it at break even, huh? We can do that. We can set it up in here. We can come in here and we can go edit 8. And we can say trail until break even. So it'll just trail down one price bar back till it gets to break even. And then it won't trail anymore. So is this going to reverse now and go back up? It's got back down to 61.8. Let's try it. Now we're looking for the reversal back to the upside. You're like, but Lan, what if it goes down more? Well, then we won't get in. Take the first opportunity to try and take a long position. This is at range bar 12. It's not a very good market, is it? Very, very good. It's not a very good market for range bar 12. So see, we're doing the same thing as we did last Tuesday. We're just doing it on a smaller time frame. Actually, I think last time we did it on 1 minute charts, right? We were trading 1 minute charts. We weren't trading range bar charts. We traded the 1 minute chart and we traded it with the ATR. So this is a little bit more aggressive. This is the range bar 12 and we're just trading price bars back. We can go look at 1 minute bars and see what they look like. We're only up $85 right now. How much are you having to pay every time you get in with one contract? Well, if we come over to the key, you can see, oh, we're long. We got our stop right there. The key says day margin 1892. So each time we put in one contract, one position, it's $1,892. That's all we have to have. And there are no pattern day trading rules. So we don't have to have a $25,000 account. You can do this as a $5,000 account. You can open your account up $5,000 and do this. All you do is just get this software that I'm using, which is Track and Trade, and then go over here to open real money account and click that button. It'll give you the paperwork. You fill it out. It's almost too easy. Send them $5,000. Away you go. Trade, trade, trade. Your heart's content. There we go. There it goes. Come on, buddy. Come on. Let's get out. Oh, I need this guy to be green. Why is he white? I need a green one. I didn't have a green one. They only had white and red. Where'd my pin go? Oh, he's over in the red guy. Left over in his neck. Oh, I shouldn't have touched him. Shouldn't have touched the red one. Made the market go red. Oh man, is that the 10-minute mark? That's not the 10-minute mark. That's usually what happens at the 10-minute mark. Okay, what are we going to do now? Oh, we're not in the market. We don't have any choices. Let's see, what's it going to do? It's just getting a little crazy now. Let's go over. This is an opportunity. Let's go look at the 1-minute chart. Maybe we could trade that a little better. I don't know. Let's get rid of the ATR. We got the moving averages in here. Those are important. We got the 100. That's the blue one. The 28 is the red one, and 200 is the green one. So we're below the 200, above the 100. Using 100 as a support area. 28 is kind of the center line. That's the little red line. What is it doing? I think we need to go trade. I think we need this down here. I think we're going to go short. All right, that means we need the little red guy. Not this one. Okay, come on, red dude. Come on, Mr. Red Guy. We should give him a name. Somebody got a name for this guy? What's his name? Oh, we call him his Red Guy. And we threaten him. Say, if the market goes up and stops us out, you're going to get this pin in the neck. If it goes down, we won't put the pin in your neck. All right, so come on, little voodoo science. We need a market that's moving. This market's dead. Look how dead it is. Even the best market, I mean, the best 1, 2, 3, 4, 5, 6, 7 bars, all we got. They were flat bottom bars. And then we got 1, 2, 3, 4 flat top bars. That's a rotten market. Come on, you can do better than this. All right. Come on, come on, come on. He's doing okay. He's trying. He's trying. He's trying. He's trying to drop. And this is a 1-minute chart. So each bar, get a new bar after 1 minute. And notice up here we have a countdown timer. See that? 48 seconds, 47, 46, 45. It's got a countdown timer. It's telling you when we're going to get a new bar. But all we can do at this point, because the computer's trading everything for us. It's got the limit order there. It's got the trailing stop. It's got the order position. The only thing we can do is cheerlead and stab this guy here in the neck if the market doesn't fall in our favor. Okay, there we go. Now this says $250 is where we'd get out if it come down and touch that. It'd probably come down initially and test this low point right here. So oftentimes we'll take profits right there. So we could scoot that in there. Just all I have to do is come down and test it, not pass through it. And take our $250. Come on, come on. Come on, touch it, and I'm going to stab you in the neck. Okay, you got away. You lucky little booger. I was going to stab you in the neck. Okay, so you got to have voodoo science on your side or else you can't trade these markets. Okay, that's the only power you got to move the market. Unless you're Vanguard, BlackRock. Then you got a little bit more power to move the market. But us, that's the only power we got. Okay, so now what do we do? It's testing this low. Let's see if it'll break through it. We got the coming down here into the green zone. We had a little bit of green. Look at this. Look at that. Look at that. Look at those green bars. There's a lot of volume popped in there for those green bars. I think there's people want to go long. We're struggling here today. We're really struggling to get something going. There's breaking through. Market closes. There's our alarm. Closes in 15 minutes. You think we can get another trade off by then? You think the market can move far enough to make any money? I don't know. We could go down. Let's go look at a different size time frame. We go to a different market too. That's the NASDAQ. We could go look at the, we got the Dow. We go look at mini Dow. Let's see if mini Dow is doing anything. That's a 1 minute chart on a mini Dow. Ooh, that's not very good either. Let's get rid of the, since we're not using ATR, let's get rid of ATR. Look at all the spiky dikey doos. There's no way we could trade the 1 minute chart on the Dow with price bars back alone. Too many spiky dikey doos. Those moving averages aren't doing us any favors. What do you think, guys? What do you think on this one? I don't think we want to try and, we might be able to do this one with the ATR if we pushed them out a little bit farther. Problem is you're getting a lot of, well, I don't know. I don't know. Let's watch it for a second. It's a 1 minute chart. NASDAQ. How much would it cost us to put an order in on there? $779. If you have $779, you can trade one contract on this on the mini Dow. And mini Dow, if you put in that much money from here to here, would be $270 in profit. All right. So that's the leverage you're dealing with. All right. So we got a little ABC package happening here, pattern here. So if we can get a little pullback, we could enter the trend, anticipate that the market's going to continue to fall. So let's anticipate the market's going to continue to fall. So we get a couple little bar. Okay, 1, 2, 3, 4 bars. Let's see if we can get 2 green bars. Come on, give us a little green bar. Green bar, green, make it green. Of course, you never know. Could be an ABC this side too. Could come up here, come down here, and then take off and go that way. But we're going to anticipate a continuation of the downtrend. All right. Why, Lan? Because I think we're going to get this ABC pattern. We're getting this little fall, get a couple little green bars, and I think it'll fall again. Now we got the 10-minute bail coming. We don't like to be in the market during the 10-minute bail. How come, Lan? How come you don't like to be in the market on the 10-minute bail? Because that's when I think they turn off a lot of the quant systems, and the market has a tendency to go all over the place. And then if you're in, it just usually stops you out. Okay, there's our second green bar. So let's see if we can get in on a short position off that second green bar. How do you know it's going to make a second green bar, Lan? How did you know? I've just seen it a lot. See, happened right there. Get a little downtrend, couple little green bars, and a continuation of the downtrend. So we got an uptrend. Now we get a couple little red. Now we get a couple green bars. Now see if we can't get a continuation of the downtrend. That's all. Just because I've seen it happen before doesn't mean it's going to happen again. But put your little order on there and see. You never know. You're not going to take a big risk. One price bar back. Stops us out. Stops us out. Come on, buddy. Don't stop us out. Don't stop us out. So close. So close. Don't stop us out. How come your bars are a different color on this chart? I don't know. There's some settings I was playing with, I guess. How would you change them back if you were to change them to the brighter color? Do we have time to go play with that? Come over here to chart preferences in the right click menu and slide down here and change your colors right here. See, I got them dark green. It just changed into lime green, fire brick, red. There. How's that? Make you happy? Yeah, I can see them better now. Oh, okay. All right. Wouldn't you be better off if you had the ATR on just as a tool to look at it? I don't know why I'm playing red to green. I'm playing red to green. I'm down at the blackjack table in Las Vegas playing red to green, red and green, red and green. Come on. There's our 10-minute bell. See, it's jumping all over the place. Usually that stops you out. Our stop's back far enough and it's continuing down. Okay. Okay, that was our little 10-minute bell. Jump, jump, jump. Okay, we're down here. We're only up 30 bucks. 1 minute chart. This is a lot smaller. The market has to move a lot farther on this chart to make money. The NASDAQ makes and loses a lot more money than the Dow, a little bit smaller market. But this is the Dow 30, so it's the 30 big industrial stocks, and they got to move. They got to move. They got to trend, and it's a little bit more difficult to get them to trend. NASDAQ, on the other hand, that's the tech stocks. Everybody likes to day trade the tech stocks, so they have a tendency to trade a little bit more. Come on, don't do this to us, you stinking little booger. Oh, we're going to get stopped out. We just will take it off right now, reduce our loss. Can you believe that? It's going to stop us out only to turn and drop again. I hate it when it does that. So what do we lose? 45 bucks on that one. Plus commissions and fees. Don't forget. Or in the demo account, there's no commissions and fees. In the real money account, there is. So keep that in mind. They're not very big, but they are there. Look at this thing. Look at the topping tails and bottoming tails on that thing. Those are what Claire calls whiskers. Those are whiskers. Look at the whiskers. Generally, we just call them wicks or candle wicks, right? Ross Cameron's the one that calls them tails. Pick that up from him. Claire calls them whiskers. Come on. Come on, whiskers. Look at that. Now it's starting to drop. I don't think we're going to get anywhere out of this. We got less than 10 minutes till the bell rings, and I don't know if we can get a trend. Look at all the nasty whiskers. We're not getting anywhere. This market's dead. Let's go look at something else. There's the NASDAQ again. Lan, your colors are wrong again on the NASDAQ. Well, if you want them back, you just come over here to this one and say save and apply settings. We'll just say save as mine, save and apply settings to all charts. Okay, now when we come over here, they'll be the same color red. Are you happy now? You got your Christmas colors? I dim them down because sometimes when you sit here for hours on end and stare at these stupid little charts, those greens and reds start to really bug your eyes. They go buggy. So I dim the colors down so that they're not so bright, but it makes it harder to see on the internet, that's for sure. Well, we haven't had any good luck today. We really struggled. We're only up 135 bucks, and this market's done nothing. We're lucky to be up 135 bucks in this market. This was a tough bugger to trade. This was a dirty bugger. I was going to give it up right now and just say, all right, we're not going to do any more. And that's usually right when it starts to trend. Right when I say I'm done, I'm getting out of this thing. That's the market takes off. And you're like, well, that's my kind of luck. Not that I can get in here, not with this strategy, because we'd be looking for a downtrend on this one right now. Couldn't you go up, Lan? Well, it's one price bar back. So it's going to be not counting the, look what would happen if you dropped it in right now. I'll do it just to show you. If you drop it up here, say, well, I'm going to try and go long, one price bar back, it's going to go jump down to this one here. See, watch. Dunk, the one price bar back. It doesn't count the action bar. All right. So now it would go and it'd pick you up on the way back up again. What's going to happen? What's going to happen? Okay, are we going to get, let's just see if we can get a quick scalp out of this thing. We'll go like this. Come on. Come on. Watch, this is where we give all our money back. When you start trying to trade, I just want an extra, just one more winner. Please give me just one more winner, little one. Come on, I'll just take a little winner. A lousy market, little winner. Come on. And that's where you start giving all your money back. Ask me how I know. All right, hit the exit chart, Lan. Exit all. All right, we're done for the day. Let's go see one more thing. What are we here for? We're here for, just to give you a little idea of what this is. This is me, Lan Turner. If you want my help, if you want to do this for yourself, and you're like, hey, Lan, can you help me just get started, get me up and going and trade with me one time, a couple times, maybe an hour? Just spend an hour with me, just me, all by myself, and help me set up my software, help me trade, help me get everything up and going just like you're doing so I can come and do it myself. I will. Okay, just go to lanturner.com, sign up for an hour, and we'll go trade together. And I'll help you set up your software, go get your track and trade. You can scan that with your little scanner thing on your phone. It'll take you right to my sign-up code. You can sign it up, get an hour, and away we go. And you and I can work for an hour, and I'll help you set up your software, help you set up your charts. We'll trade together. We'll do that screen share thing where it's just me and you all by ourselves. All right, so you can do that. And if that's interesting to you, if not, then don't worry about it. You don't have to. It's just an offer, and I'm just offering my time to you. If you want to do it, how do I get rid of that? There we go. All right. And then the other thing we want to do is we want to make sure everybody's signed up for Pit News Magazine. Are you guys signed up for Pit News Magazine? If you're not signed up for Pit News Magazine, you got to sign up for Pit News Magazine. Everybody has Pit News Magazine. All right. pitnews.com. Let's go back over here and do this Pit News Magazine because this one's a lot more fun. Here we go.
Ready to level up your news game? Welcome to Pit News Magazine, where stories come alive. Read it, hear it, or watch it in our YouTube classroom. Right now, get your first two issues for just $1. Yep, only a buck. Don't love it? Cancel anytime before the $39 yearly fee kicks in. Try it out. Risk-free. Satisfaction guaranteed. Or your money back. Visit pitnews.com. That's pitnews.com. Pit News Magazine. News your way.
All right, and for those of you guys who have Pit News Magazine, it dropped today. So today was Pit News Magazine. Go look in your inboxes. If it's not in your major inbox, look in your other one. We've had a little bit of a problem getting it to deliver properly. So go ahead and make sure you drag it into the primary box. If you're on that Google thing that has like 6 inboxes, drag it into the primary one, right-click on it, tell them, hey, don't throw this in the trash. Hey, this is good. I like this one. And it'll come into your main box. We got to get more people to do that so it doesn't, so they don't see it as a one that people don't want. So it's not spam. You paid for it, so it should come to your primary box. You just need to let them know that that's what you've done. All right. So everybody, go get your Pit News Magazine. It's a really good one this week, this month. We worked really hard on it, and Claire especially worked really hard on it. It's got some notes in there from her, and so I think you ought to go take a look at it. And it's a banner good one. All right. It's a really good one. So I wrote an article in there. It's a little long. Be ready, be prepared, but it really covers a lot of ground. All right. So you're going to want to save that one, kick it out as a PDF and put it on your desktop and make sure you save that one. And we're going to catch you guys tomorrow morning, bright and early, 8 o'clock, 8 a.m. Mountain Standard Time. Be there, be square. Same bat channel, same bat cave. See you then.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pit News Magazine.
Oh yeah, definitely subscribe to Pit News Magazine. You'll thank us later.